Okay, welcome. Let's look at what we got. It's almost time for um pre-London Open. Yesterday the forecast we dished out. We anticipated sales on GJ. Okay. But you remember you got to be fluid like the market. You have to be fluid with the market. Okay, I was looking at sales below the structure, buys above here, stop loss here. I did not anticipate buys here because the structure I would not want to take buys if we get a bullish breach, because then this could be a faker. It could breach, then turn bearish and continue dipping. This is what people call imbalance. However, it's a faker in the other opposite direction whilst you are looking to take sales. So I wasn't worried if price was rallying. Again, if you gauge the momentum of the sellers versus the buyers, you will see that the sellers were already showing weakness. The buyers, on the other hand, were showing weakness, which is also good. That means both the sellers and the buyers were not really sure what they wanted. Okay, so I was just observing it. Later on, I took buys on the break of this high here, because like I always tell you, those of you who were around the first batch, you would understand that the market, although you might be in seller's territory anticipating or looking to take sales, however, if the market gives you a bullish minor territory like a counter trend, you can take that counter trend, get your 1 hour, then wait for price to turn in the direction you were already anticipating in the first place, then go in that direction, take your sales. Like in this case, the sales, because we were in seller's territory, we were expecting, anticipating price to turn bearish. Price turned bullish, we took the buys, banked 1 hour. The trade was closed here. As you can see this, anyway, I'm going to show you on the chart. And this is just a picture of our trades. Then it turned bearish. What happened? Trade was activated once it this is my pending order. Most of the trades are pending order. Now there's something I want to talk about quickly, which is a candle opening without a top wick, especially a bearish candle in a seller's market without a top wick, breaching a zone or a level that is supposed to act as support. What do you do? In most cases, I'm always skeptical about taking sales when a candle has no top wick, especially a bearish candle in seller's territory. However, because of the distance from where the candle opened and where my stop loss is, I was not concerned or perturbed or worried, because even if the next candle gives us a top wick, it will never go above this level to take me out. And even if it does, I would want to read to gauge if there is another place to take another trade, which is why I always advocate take 1% of your account so that you will not be emotionally attached to the trade. 1% means you have 99 other trades to take if that trade does not work out. But if you're taking 10%, you have only 9 other trades to take. You see the big mathematical margin, 99% and 9%. If you're taking 2%, you've already cut your account by 50%, because every trade you take cuts your account half. You understand? So 1% gives you 99 other options to take, and you can never make 99 wrong decisions. Even Thomas Edison, Benjamin Franklin, Tesla did not make 99 wrong options after the first wrong option. So what I'm trying to say is 1% keeps your emotion at bay, and also makes it possible that you would not influence or change the parameters that made you get in the trade before it started working against you. That is me talking about money management, and if I'm just putting some risk management things into it. Okay, so trade was activated. I dropped to the 5 minutes time frame to gauge the momentum to see how price was performing. to see if there's a way for me to stack some positions or enter some positions because price was already showing beautiful bearish momentum. Price was already indicating that it wants to dip. We were approaching um I think New York open, New York open, which is also going to lead us into New York Stock Exchange open. So around this place, I entered another position, kept my stop loss. It will be above this structure. Kept my stop loss above this structure. Okay. In fact, the stop loss I put because I knew that if this wants to return, it might take this guy out, but it will not take this guy out. So I put my stop loss here. Yeah, it's crazy, but I know that by the time you get used to price action and understanding how it works, you would understand why I kept my stop loss above here for even all these trades. All of them, this one is the first order I placed. The other ones were ones were the stacking position that I placed here, but all of them had their stop loss here. Yeah, it's mathematically not right to put your stop loss here, but when your TP is very low down, you would always make the profit you want to make. So this is what I was looking at. Now let's go to the live chart. Let's see what we want to do for today. As you can see, price is already playing out, and we're supposed to be taking this trade. We are supposed to be taking this trade. So for GJ, I'm looking to take sales, but this is where this level will be an area where price would dip to. So if it's possible, I would just advocate or advise that do not rush. Okay, let's see if we can get some deeper retracement before we take sales, just like what we got here. At least it will give us room since we are already close to a level that price could react from. From here to here will just give us one arrow, which is not much, but it's okay. Anyway, if you're new, if you're watching this on YouTube, don't forget to subscribe, hit that notification button, comment, and like. Okay? So that you'll be updated and you tell me what you would like to see. Without much ado, let's look at gold. Well, for gold, I'm anticipating buys. Certainly, gold and GJ have been trending. I call it anti-correlators, like trending in the opposite direction. GJ is dipping, gold is rallying. So I'm looking for buys on gold. It will break this high for price to continue going up. This is scenario one. Now, if we get some deeper retracement, beautiful. Retest of this high will be my TP1. And then if price breaks it, we'll continue going up. So this will be scenario 1B. This will be scenario 1A. Then if we breach this support bearishly, I'll be looking to take sales. This will be scenario 2. So this is what I'm looking at on gold. Okay. Gold will definitely has a in fact gold has a massive room to go up compared to um, British pound, Japanese yen. So this is what I'm looking at on gold. Let's look at the last but not the least is Bitcoin. Wow, Bitcoin has tapped 2400, but do not rush because price has hit our overall TP, which is this level. Now, what we want to do is wait to see if we can get a bullish breach, then anticipate price to keep rallying. Now, why I say don't rush into it is that those who trade patterns will see this as Aru 1, Aru 2. So they will already be stacking their sales position, which is why you see this dip. Then again, those who are looking at this as Aru 1 again, this will be Aru 1 minor, and this will be Aru 2 minor. So if price comes anywhere around here, they want to take sales again. They take sales, those who are trading with Fibonacci will take sales and their first TP will be around 50% Fibonacci Fib level or 61.8 or 72.3 Fibonacci as in Fib level, that they are not expecting it to just break this low. Instead, they are expecting it in a best case scenario for it to dip to the point where it will retest this low. If it doesn't do that, anywhere from here, they'll be looking at closing their positions. So this is 50%. This is 61.8%. This is 72.3%. All of these are fib levels. Yeah, most of us we had to study almost every indicator to understand the weaknesses and the strengths of the indicators before we decided that, hey, first of all, it lags, except for Fibonacci, because it's just there. Every other indicator that I've looked, Ichimoku, EMA, DMA, mention all the MAs, even MAs too. Most of them lags, even if it's ROSI, MACD, just mention it. Different and the permutations of indicators, all of those things have a way of lagging. But when you learn to read the market using price action, you would understand that this is the best thing because you're seeing market play out and you're only being the voice to tell, okay, this is where I see it might react from. I'm going to stop here for now. Again, if you're new here, don't forget to subscribe. Don't forget to hit that notification bell. I think it's down here, somewhere around here or down. Don't forget to comment what you like to see, what you like to be adjusted. The last but not the least, thumbs up will be much appreciated. That's all for now. Bye. Peace. This will be scenario 1A. Scenario 2, if we get some deep retracement to retest this high. Then scenario no, this will be scenario 1B. Then scenario 2, if we get a bearish breach. Okay, so this is what I'm looking at on Bitcoin. So that's all for now. Peace.